So today we had the shocking news from Tesla that its CFO is stepping down. Now, of course, when this news came out, we saw that Tesla started selling off in the early parts of today's trading session. Now, this morning in the Push and Profit private group at 9:33 a.m., I said for the upcoming week, if the market remains stagnant or even weakens and sees more sales before the CPI announcement, a strong CPI result, meaning the CPI printing well, could have significant implications. Moreover, if this positive CPI data coincides with a declining US dollar and yields, it could lead to the substantial upward surge. And so in this video, I want to go ahead and break down why right now in the short term is looking a bit optimistic for Tesla. But before we even go there, I want to cover a few additional things as well. For example, the Wall Street Journal reported that NASDAQ heads for the longest losing streak of the year. Now, if you take a look at the NASDAQ Index ETF QQQ, we do see that there has been a bit of selling pressure recently going on. And so one of the things I've been telling individuals that are part of the Push and Profit private group is that, hey, things have been selling off drastically in the short term recently. And right now, having a positive print in the CPI report that is coming up later this week could really push the markets upwards. But again, if you go ahead and add that with other economic data, as I mentioned earlier, that could really push the markets up. However, there are a couple of other factors that we also have to talk about. For example, today Lucid just reported their earnings after the close, and then of course tomorrow we have Rivian reporting their earnings after the close. And so in Lucid's recent earnings report, they literally missed by having their second quarter revenues actually lower than what was expected. They came in at 150.9 million when the estimate was 176.6 million. But then on top of that, their loss per share was greater than what analysts also expected as well. Now, the reason why I'm highlighting Lucid having bad earnings and this being good for Tesla is because, of course, everyone that looks into the EV space looks at what the competitors for Tesla is doing. And of course, everyone looks at what the legacy automakers like Ford and GM are doing. And so if we continue seeing, these EV companies like Lucid and then tomorrow Rivian doing bad, well, that puts a lot of more optimism for investors to go ahead and pour money into Tesla. Now, we've recently come off a lot of selling pressure, and so this is good because if you combine the positive data that could possibly come out later on this week with the CPI report showing that inflation is still cooling off, well, this could seem very well for Tesla. However, in this video, I want to go ahead and break down my overarching views for Tesla, both from the perspective of a long-term investor and also the perspective of someone who's trading Tesla simply in the short term. But before we do so, I do also want to let you guys know to make sure to check out the links in the description below, because the first link is going to be a link to join the Push and Profit program. This way you guys have exclusive access to my daily briefings where you guys get the updates that I send out every single day on trade ideas and also what's going on in the overall markets. But if you can't join the Push and Profit private group, there's also a link that is completely free to get access to my free weekly newsletter, where every single Sunday I send out an email kind of just covering some important topics for market participants to pretty much understand what's going on in the landscape of the market. So there's definitely a free alternative for individuals who can join the Push and Profit program. But with that said, let's go ahead and hop into my laptop. Alrighty, so we are officially in my laptop and I want to go into the nitty-gritty of a couple of topics. Now, I do want to apologize as I am still coming off of a bit of a flu. So there's definitely a lot of congestion on my end, but hopefully it's not anything that just stifles you from being able to extract some value from this video, right? Hopefully I don't have to breathe too heavy and it's all fine, right? So let's go ahead and talk about Tesla and really just kind of zoom into a small time frame. So of course, there was a news today of the CFO stepping down for Tesla. Right now, Tesla stock did drop down quite a bit. In fact, if we measure it from the opening of the day, it was roughly almost close to 4% or 3.5%, right? Now, obviously, we did bounce back up, but it was a bit of a shock simply because, a lot of individuals spectated that this CFO, right, was pretty much going to be the person who eventually inherits, being the CEO for Tesla, kind of like the relationship with Steve Jobs and Tim Cook, right? And so it was a bit of a shock to see him leaving. Now, of course, it's not the end of the world for Tesla. Tesla's still doing what it's doing. And so, one of the things I mentioned earlier in this video is obviously the CPI report. I always talk about having a holistic approach and looking at economic data, but I also talked about looking at, earnings for some of these similar companies like Lucid. Now, we saw that Lucid did pump up pretty much right before their earnings, but then they had a bad earnings release. I told you guys that they missed on their earnings, and so they sold off. But we see that, Lucid is still pushing upwards quite a bit. Now, you may be confused. Well, the reason why is oftentimes I say on the channel, and I also say to the Push and Profit private group, that there's a lot of nuance when it comes to these earnings reports, right? There's obviously, sections of the earnings report that you want to kind of parse through and kind of see what's actually going on. But then, of course, there's a second half of it, which is the forward guidance. And so Lucid is still kind of pushing upwards simply because of their forward guidance. Now, I want to go ahead and show you guys this. So we have here from MarketWatch, Lucid stock rises after EV maker keeps 2023 production guidance intact. So basically, they're saying that their numbers of their vehicles are still going to be able to be reached, which is honestly a whopping 10,000 vehicles, which is pretty sad. I honestly don't think that's anything to even be worried about. Especially because we see that Lucid is continuously losing money, and we see that the people that are funding Lucid, right? We see Lucid, whose largest shareholder is Saudi Arabia's sovereign wealth fund. Now, eventually, the Saudis are not going to want to continue just pumping in billions of dollars for this company that is not really reaching its expectations. But at the end of the day, maybe they will, right? But it's not something that's too much of a threat for Tesla. But having them not do too well in their earnings. Of course, they did, promise that they're going to still do 10,000 vehicles, which is honestly sad. But them losing on their earnings is actually a catalyst event for Tesla that is positive. Now, I also mentioned that, hey, we had Lucid's earnings. Tomorrow we have Rivian's, right? And that's going to be interesting to watch as well. Because obviously we want to see, if you're someone who's invested in Tesla in the long term, well, you kind of want to see the competition not doing as well. Not saying that, we want bad on others, right? Because obviously some individuals may have exposure to Lucid and Rivian, and that's completely fine. But if you're someone who's, pretty much, a Tesla bull, right? Then you kind of want to see Tesla still ahead of the competition, right? And so that's something that we want to see. Now, going back into Tesla, let's go ahead and kind of go into a weekly time frame. Now, for a while, I've been saying that, hey, based on the fundamentals, the macroeconomic climate, and then also looking at the technical perspective, I expect Tesla to continue being bearish in the short term. Bearish, right? And the reason I said that is because, we see that we're getting rejected by this descending trend line. And one of the things I mentioned in the past was like, Tesla could pretty much, I want to watch it fall down to this early $200 level simply because there's a lot of volume by price relative to price around this area, and it's been a support level, and it's also been a resistance level. Now, it doesn't necessarily mean that Tesla is absolutely going to fall down to this area, right? Because at the end of the day, stocks don't have to adhere to whatever lines you draw on the chart. And so, I'm still bearish in the short term, but in the real short term, right? And I know this may sound confusing, I'm optimistic. Why? Why am I optimistic? Well, we're having these other competitions or these other companies release their earnings. It's not looking good. We have the CPI report coming out. And, I don't have a crystal ball, but I do expect the CPI report to come in positive. So let's go ahead and talk about the macroeconomic climate, right? So let's go ahead and go back over here. And I want to highlight something. So these are the rate hikes that we've had, right? Pretty much the first one starting in this cycle back in March 17th of 2022, right? And one of the things I've often said, publicly on YouTube, on this channel, but I also mentioned this a copious amounts of times to the Push and Profit private group, is that it takes, quite a bit of time for the economy to go ahead and feel these rate hikes, right? It takes some time, typically about 1 year for the economy to feel the impacts of monetary policy. And so where are we right now? Well, we're pretty much in that year period where we're starting to feel the area where the Federal Reserve was, being very aggressive, right? Because last year was around over here where the Federal Reserve was hiking by 75 basis points, 75 basis points, 75, 75, 50, 25, right? Now, obviously, they started to cool down. They had a pause, and now they're doing 25 basis points. But we're starting to see this reflect into inflation. How do we know? Well, when we take a look at the inflation rate, we see that it's cooling off, right? The Federal Reserve's goal is to get it to 2% because obviously they have a dual mandate of having price stability but also maximum employment. Now, of course, with them hiking rates, they do kind of have to sacrifice a little bit of the labor market to, go ahead and reach this goal. But what have we been seeing? We have been seeing that the labor market has been pretty robust, right? We've seen basically in last week's job data, right? It's important to pay attention to all this data. We saw that a lot of these companies, despite the economic, downturn and their profit margins, so far have been hoarding their employees. Now, this is good. The only problem is this is going to reflect on the third quarter on their earnings, where they're going to have a compression on margin profits, right? So there's two scenarios that we're going to end up seeing. We're either going to be seeing these companies have their margins compressed by still hoarding labor, which would hurt obviously the stock market, right? Because of course, investors pour their money into a stock hoping to get a return on their investment. And so if you start seeing these companies kind of, diminish in their profit margins, well, we could see a little bit of selling going into the third quarter with a lot more companies missing on their earnings, right? And so that's not going to be good for the market. Or we could see an inverse, right? Where we could see maybe these companies, instead end up laying off the abundance of workers that they have. Now, how do we know that they're still hoarding workers? Well, we saw that the weekly hours, right, they're diminishing, right? So these companies are not firing people, but they're still holding them, but just giving them less hours, right? They're very reluctant to just get rid of people, simply because we saw in the last 2 years, especially after COVID, it was very difficult to get people. I mean, honestly, it was very difficult to acquire some talent for a lot of these companies, and so they're hoarding. And so there's only two scenarios. Either, we have these companies lay off, which would trigger a recession because that's the only thing holding up, from not being a recession, the labor market, or they hold on to their employees, but then we see a compression. And so that's why, going forward, I do expect, third quarter to be a little bit brutal, right? But that's just like my overarching view kind of looking forward, right? In the short term, the markets are going to react positively to seeing that, the CPI report or the inflation, right, is going to look positive. Now, again, this is not for certain, right? It's not, I do want to provide clarity. I can't guarantee that the CPI report is going to show that it's positive. But obviously, if the federal funds rate has been increasing and the real rate is now pretty much, I believe, almost like a 2%, I think that's the delta between the federal fund rate and what the inflation rate is, obviously it's going to start compressing inflation, right? And so that's what we have been seeing. We've been seeing, inflation, stifle and come down a bit, right? And that's good. And so the markets are going to, in the short term, going into Thursday, if we have a positive report, look very optimistic. And then I said, hey, if you combine this economic data and then also see that yields are declining, well, that could really be a surge for the market. And, one of the things you have to understand is that when there's a sell-off, like we're seeing in Tesla, and we take a look at the QQQs, when there's a sell-off, it's not like it just goes straight down indefinitely, right? We have, the market moves up and down, right? It's very simple. People very much understand the concept. And so I expect that around this area, right, especially as we do have some volume relative to price, that it'll hold up. And if we have good data, it's going to start bouncing up. Now, the question is, when it starts bouncing up, is it going to break above this descending trend line, right? Because if it does, well, that's confirmation that things are looking bullish. And then in that case, my long-term investment portfolio, I perhaps may add more into Tesla. But that's not something I really think is going to happen. I think we're going to have a little bit of a bounce and then continue dropping, right? Because I said, going forward, there's really only two scenarios. Either we have a recession because these companies let go of their employees, or we have margins compressed, which is still bad for the overall stock market. It's good for Main Street. It'd be great for the economy in Main Street if, these companies held on to their employees, but they just kind of suffered a little bit of loss on their balance sheets. Well, yeah, great. But that's not going to be good for investors in the stock market. And so either way, I still see that, there's going to be a cooling down, right? Now, again, I always emphasize that you want to stay data dependent. I don't have a crystal ball. And right now, what I'm saying is just based on the data that we're seeing. But if we see data, have some variance and starts changing and shifting, then of course I'll also have to update my overarching view. It can't just be dogmatic, and you have to be very agile, regardless if you're investing long term or you're trading in the short term. You have to understand what's currently going on in the markets, and that's why I say you can't just pay attention to these trend lines, right? You have to look at the fundamentals. You have to look at the alternative data. You have to look at there's I was about to repeat myself. You want to look at the alternative. Did I say that? Man, this flu is getting to me. All right, there's a lot of data points. The economic data, right? I'm almost. I hope you guys forgive me for this. I'm losing my mind over here, trying to breathe through one nostril. But you guys get the point, right? You want to look at so many different, or multitude of different data points to really understand what's going on. And right now, I do expect that we're gonna have a little bit of a bounce, but I don't think this is gonna take us out from just everything kind of going down and automatically push us upwards. I do think that more selling is gonna continue to slide. But you guys let me know in the comment section below. Maybe you guys disagree with me, and that's completely fine, right? It's completely fine to disagree with me. At the end of the day, you should never trade or invest based on anyone else's opinion, and you should always do your own due diligence and only trade and invest in whatever you see value in, right? Pretty self-explanatory. But with that said, I'm going to go ahead and end this video here. Make sure to check out the links in the description below, and I'll see you guys on this next video right over here. Take care, guys.